So today's video is going to be on the subject of day trading, and the specific reason I want to make this video is because I want to try and combat some of the misconceptions that people have about day trading. I've talked to a lot of people and a number of different people that have sort of expressed interest in actually participating in day trading, and I think there's a lot of people that don't realize what exactly it is, what exactly it means, and what kind of risks are actually associated with day trading. And so that's sort of the point of this video. Quickly explain what day trading is. It's effectively when someone is buying and selling investments, typically stocks and another couple of different things, on a frequent basis. So you might buy a stocks company in the morning, you might sell it by midday, buy something else, sell something else. You're making multiple trades a day trying to take advantage of short-term gains and minimize short-term losses. Okay, so that's sort of what day trading is. And I think one of the biggest issues with day trading is it's often sort of glorified in the news and in pop culture as this sort of interesting thing that people do that can make you a lot of money, that's very sort of almost idolized as a investing strategy. And I think that's a huge problem because it's a huge misconception. So sort of combating some of the examples that you hear, you often see things like articles where it says, 14-year-old makes $150,000 by trading stocks during his lunch break. And let me tell you right now, that article is a lie, in case you thought it was true. You'll see it in things also like movies. So The Wolf of Wall Street was something that came out a couple of years ago, and that was talking about people who were investing in penny stocks, and it's sort of, once again, glorified trading and day trading where you're making tons of money. You're selling things and doing wonderfully on that. And you see it in a lot of different areas. And just to use an analogy, now just before I make this analogy, by no way am I equating these two events. It's just sort of the same sentiments were approached that I think are with the same two. So if you're at all familiar with history, and specifically around World War I, previously to World War I, battles and wars were typically sort of a one-day event. People would go out and fight for whatever reason, and often it was considered honorable, noble, you're going for glory, and there would be cavalry charges and sword fighting, and it was sort of almost an accepted and celebrated event. So that was pre-World War I. And there's a lot of people who entered into World War I, signed up early on. That was a lot of the times what they were going into the war thinking. That's what they were feeling, but they were very wrong. Once they got into the battle, once they realized what 21st century warfare was like when it came to artillery, when it came to trenches and a number of other things, they realized, oh wow, this is awful, this is terrible, this is nothing like what the sentiments that were associated with it. And again, by no way am I equating stock trading, daily stock trading, to a war, but the same sentiments are sort of there in both. When people participate in day trading, stock trading, there's often this sentiments of I can make a lot of money, I can be quite successful. This is almost something, it's you made 20% with your stocks last week. That's sort of a metric for success in society. And there's a lot of glory associated around it. Maybe that's not the right word, glory, but there's a lot of pride that can be associated with I made money doing this. That it's a fashionable thing almost to do. And I think that's a huge issue because there is a lot of negative side effects to day trading. And let's get into those right now. The first, and probably the most prevalent, is that people don't realize is there's fees associated with that. Every time you make a trade on the stock exchange or a stock exchange, you have to pay a fee. And typically that will range anywhere between $4 to $10 per trade. That's when you buy and that's when you sell. So let's say you're day trading. Let's say you make a trade 7 times in a day. You buy and sell 7 times. And let's say you're paying that $10. Well, you paid $70 in fees that day. And you may think, I made $300 today. Well, you actually didn't. You made $230 because you have to subtract your fees from your overall investment value. The same thing will happen on a day you also make losses though. Oh, well, today wasn't great. I actually lost $100. Well, no, you actually lost $170 because you had to pay fees to make those trades. That's the number one issue with day trading, is that you're paying a number of fees when you're making these exchanges on a very rapid basis, and those add up very fast. $5 may seem insignificant when you buy something and hold it for 6 months, but when you're buying and selling on a frequent basis, it adds up very fast, and it really cuts into your returns, and it makes your losses much more significant. That's the first and major issue with day trading. And the reason that this is sort of different than other forms of investing is, let's say you're investing in mutual funds. Typically, if you're buying mutual funds through your financial institution, so your bank, your investment company, whatever it is, there often aren't any fees associated with setting up a regular deposit and a regular investment into a mutual fund. Let's say you're investing $50 a month or $100 a month. Typically, they won't charge you as long as you set that up and you're consistent with it. So there are no fees associated with that, typically. With stocks, there is no way to do that. You always have to pay that fee to make that trade, and those eat into your returns. The second major thing with day trading is that one of the big issues with day trading is that when stocks are doing well, yes, when the economy is doing well, you can definitely make money. When overall companies are increasing in value, you can ride that sort of wave and you will make money. And I've heard this a lot from friends who say, oh, my friend is doing this and he made $100 last week. Yes, they can make that money. You can make that money, and you can make it quickly. You can buy something in the morning, make $500 and sell it. That is a possibility. But on the same token, when you're making these gains, the losses are even worse for day trading, because what happens is you buy something, the markets start to do poorly, you're like, oh God, I have to sell, so you sell it. Let's try this instead. Well, you buy that, and the markets continue to go down, you start selling. So the highs and the gains that you can get from stocks can do well, but the losses are amplified. They do really poorly for you. So day trading, if you're thinking about it, it is a very bad idea. It is not, I would not advise it to anybody, even if you are an experienced investor. It's okay to invest in stocks, that's not an issue. It's just don't invest in stocks with the idea or intention of selling them within a couple hours and constantly moving things around. Very, very, very rarely will that ever get you any significant long-term returns. And even if you are considering investing mostly in individual stocks, I would highly recommend you actually look at investing in mutual funds. It's a lot safer. You have a lot of built-in diversification where your mutual fund is made up of a variety of different things. It will protect you and your investment portfolio. And I'm actually going to make a video specifically on Warren Buffett, sort of explaining him and his life and why he was such a lucrative investor. And the main reason I want to make that video is because I hear a lot of people talking about investing in stocks, and they use him as sort of their metric of reasoning on why they should do that themselves. Oh, well, Warren Buffett was so successful with his investing, why can't I do it? Well, there are a number of reasons why you shouldn't and why you can't. Warren Buffett is very much the exception to the rule. And the reality is, if you are looking at investing in exclusive stocks, or mostly exclusively stocks, whether you're investing as a day trader frequently or you're just picking them up individually, there are a lot of reasons why that is very dangerous and why I would not recommend it at all for an investing strategy. Prioritize mutual funds. It's again okay to have some stock if you have some sound reasoning for it, but prioritize mutual funds as the primary investment for your fund. Warren Buffett himself recommends that you invest in mutual funds because it is very hard for anybody to consistently beat the markets. And so hopefully this video has helped dissuade you if you're thinking about doing day trading. If you're still sort of set on it as a choice, if you want to be successful at all or have a chance of even being successful, it's something you're going to have to dedicate hours to analyze companies, really dig into their financials and figure out what investments have potential, what don't, and it is something that you cannot sort of approach and treat. You can't half-ass it. That's just the reality. If you are going to try and invest in stocks, and specifically day trading, you really have to put a lot of time and effort into it, and it is very unlikely you'll be successful compared to if you just invested in a mutual fund. So hopefully that sort of dissuaded you from that potential marketing strategy, because it is unlikely to be successful. As always, if you like the video, please feel free to like, share, and subscribe. It always helps me and helps me create more content.